Hi everybody, welcome back to Ox Talks. It is Wednesday, December 13th, 2023. Hope all of you are having a productive day today. I did resolve my technology issues with the phone today, so we're back to a regular video. I don't edit these, but I do record them and then upload them later on. Yesterday was my first live stream. I don't know if you guys had a chance to catch that. If you didn't, maybe take a minute and go listen to it, and feel free to leave me your comments on what you think. I did get some encouraging feedback. It definitely is a little different, pushing play and seeing that there were, I think, about 100 people in the room watching and listening. So appreciate the positive comments. I do really appreciate all of you, number one, watching, number two, subscribing, number three, hitting the likes on these videos and the bell notification. Most importantly, we talk every day about sharing these videos with family, friends, colleagues, and coworkers that may not see things the way we do, may not be paying attention to other sources of news and media outside of the mainstream media and what they're seeing in the evening on the regular news channels. And I think we need to be making as many people aware of what's happening, what the real events are, as we possibly can, because things will continue to unfold into next year. Now look, cannot do the video without discussing Fed Chair Powell's comments today and interest rate decision. Do I personally think that is going to change anything for the men and women on the street? I'll get to it in a bit more detail. I think not. Is it going to change anything for the hundreds of stores that are closing, retailers, banks that are closing, layoffs that are happening, foreclosures that are happening, vehicle repossessions that are happening? No. Is it going to change the fact that we have $1 trillion of interest going to service a $34 trillion national debt every year? No. And now that's going to start growing. So, you know, the reality is that, what Powell said is that they were going to hold the rate steady at this meeting, but they expected to have, I think he said, 3 rate cuts in 2024 and 4 rate cuts in 2025. So, you know, the stock market loved that today. The stock market rallied 500, the Dow rallied over 500 points. The NASDAQ and S&P were all up as well. All the cheerleaders were out today. Look, gold and silver, spot price of gold went up almost $50, about $47.50. Spot price of silver was up over $1 an ounce. So major surges in the precious metals today, and likewise cryptocurrencies also got a really nice bid today as well. And will this continue to unfold in this direction? I believe it might. I was not personally thinking that the speech would be as dovish, and the comments, I expected him to be more hawkish, and that's because all the data points that we've been seeing over the past months, or I say several weeks since the last meeting when Powell came out and said, look, inflation is still become very frustrating and difficult to deal with, and they still had not accomplished what they wanted to accomplish, getting anywhere near the Fed's 2% inflation target rate. So what has changed in the last 30 days since the last meeting to now all of a sudden, is it 30? Yeah, 30 days. Now all of a sudden change the Fed's course 180 degrees, going from there will likely be more rate hikes to now numerous rate cuts. So are we to believe then that the economy is stronger, or is it weaker? My analysis is that, look, why would you be needing to cut rates? We're still not at normalized rates. Why would you be needing to cut rates several times if the economy is strong, firing on all cylinders? What's the purpose of it? Basically, you're undoing everything that you've tried to accomplish over the last 18 months or so. So let's see how this plays out and how the markets digest this. Certainly, it appears to be good news for the cheerleaders, but does this really change anything for, like we discussed a few minutes ago, the man and woman on the street that aren't in the 1% of the wealth percentile in this country, that aren't heavily invested in the stock markets? I don't think so. And I have a couple of articles that I saw on the street. And by the way, this is not, if truly the data changes and there is good things happening and I see good news and I see good results and good data, I'm going to bring that to you guys. The point for me is not to sift through a whole bunch of good and bad data. I'll give you the bad stuff, but I'm also going to give you the reality. And the information that I've been seeing and continue to see is not supportive of a strong economy or a strong consumer. And I'm sure all of you agree with that. So first article I saw says big retailer faces cash crunch, possible Chapter 11 bankruptcy. And this talks about a Joann. A Joann is a brand focused on crafts like sewing. It says would likely feel the same, will likely feel the pain if it can't get its financial ship rightened. The company has been struggling, and without a strong holiday season, a number of factors suggest a Chapter 11 bankruptcy filing remains a clear possibility for Joanns stores. The struggling chain recently had its credit risk monitor Frisk score lowered to a 1. Based upon history, companies that get a 1 have between 10% and 50% chance of filing for bankruptcy. It says the chain has not hidden its struggles, but the picture has grown bleaker in recent months. Joanns received a delisting notice from the NASDAQ, has more than $1.1 billion of debt, and does not even have a permanent CEO. And so this follows, Borders Books went out of business. We have other stores, Christmas tree shops went out of business, Bed Bath & Beyond, Tuesday Morning, and now Joann. And of course, the CFO tried to spin the fact that they're going to come out of this stronger and look forward to staying in business and operating. But it says many are warning that the struggling retailers attributed some of the company's difficulties to the economy. Well, how about the struggling consumer? How about the fact that the consumer doesn't have money that they once had to be spending on crafts and hobbies and things like that not only take money but take time, because they're spending every waking moment trying to earn enough money to put gas in their vehicles and put food on the table for their families. So there's another one. Joann looks like it's going to be following suit. Next article out of the street. Struggling big name brand files Chapter 11 bankruptcy. And this one deals with PREIT, P-R-E-I-T, and that is the Pennsylvania Real Estate Investment Trust. Evidently, PREIT owns and operates 23 retail centers with more than 18.3 million square feet of retail space in 8 states across the eastern United States. And what PREIT is saying is that for the properties that it owns, that it is it's struggling. They're not high-end outdoor shopping malls where the real wealthy shoppers shop. And so they basically are now going to be engaging in what's called a prepackaged bankruptcy, using the court to enact a plan that they expect will allow the business, it says, to emerge in a healthier financial condition. So we have a large large mall owner here that's going to be going into Chapter 11. More large retailers going to Chapter 11. And let's see where this unfolds into next year. I think the picture is bleak and going to get bleaker. I will leave it there for today. I don't know if I'll be able to get up a video tomorrow for you guys. I have an early morning court appearance and then a deposition that's going to take most of the day. I may not finish till 5 or 6 tomorrow night. And if I'm just shot from the day, I will likely take a breather and get a video up for you on Friday. With that being said, in about an hour, I'll be going to get my workout in today. I hope that all of you do the same. Please get your steps in. get some walking in, get some strength training in. And with that being said, all of you have a great night. And I will talk to all of you, if not tomorrow, on Friday. And let's see if these markets continue to juice higher on this Fed decision today and these Fed comments. Let's see if the gold and silver markets continue to march higher. Obviously, the opportunity cost of holding gold and silver when rates are low is higher. Is less, meaning you're not foregoing a bunch of interest income by holding physical metals. Again, those of us that hold physical metals do it for a different reason. It is our savings account. It is our emergency fund. It is highly liquid if necessary. And look, it does provide opportunity for appreciation. Gold was up a lot today, like we said, and we'll see if this continues. It's going to be much more expensive to go and pick up a gold coin now. So silver is going to have a great tear as well. Silver is still less than half of its all-time high. So very undervalued, not financial advice, just giving you my thoughts on it. Have a great evening. Bye.